Hey, good afternoon, everyone. This is Mark from Right Line Trading, and what we're going to be doing is another master class on the market internals Dominator. Now, I'm going to run through the information a little bit, fairly quickly. I've added a few slides to try to make it clearer. Once I do that, I'll open up the chat, and then we'll move to the live charts, and we'll see whatever signals we had today. And right now I have it on Avago, which made a really nice move up today. But I'm just going to move it back to the NQ and see if we got any signals today on the NQ. But I just want to start off just by taking the opportunity to explain it a little bit better. And hopefully I've added some slides that will add clarity to what we're doing. Okay, now the mandatory disclaimer that all signals and trading opportunities you provide are for demonstration and educational purposes only. Everyone understands that trading involves substantial risk and that you can lose a substantial amount of money. Always carefully consider your financial position prior to trading. Never risk more than you can afford to lose. We will give you an offer at the end, but that's really not the thrust of this. And I'm gonna skip this slide and my background, and just again emphasize that what we're looking to do is we're looking to harness an analysis that provides us with a fairly precise assessment of when the institutional money is stepped in and is driving price. Because really that is the key force that we've always been looking to track. Is large institutional money, and we all know that that's what dominates the markets. Doesn't matter what you trade and what time frame. The big institutions do rule, and they move in and out of the markets as they rotate their money from sector to sector, depending upon what they believe is going to be the most lucrative place to park their loot. Now, I wanted to show this slide, even though because I think it does have validity, and basically what we're looking at here, because of the and really this is a way of recreating what we're trying to do with the background bias. And when there's no multi-time frame alignment and trend, we know that big institutional money is not present in the markets, and we know that price on our trading chart is basically going to chop. Now, this is a period of time where we're not going to trade. And when we get that multi-time frame alignment, if big institutional money presses price to the upside, we're going to ride it up, and hopefully those market internals are going to signal us long. If big institutional money pushes price short, hopefully we'll have a multi-time frame alignment and trend to the downside, and we'll have those market internals pressing price to the downside. Now, again, we're going to ignore all of this stuff because honestly, it really is relevant. Now, price action is not irrelevant, but if we use it in isolation, it's not going to have the predictive value it needs to get us where we want to be. Now, I just again wanted to just emphasize that if we look at price on our trading chart and we see this MACD crossover, it's telling us what price has done, but it has no predictive value off the right edge of the chart. We have absolutely no way to determine what the next candle is going to do, whether it's going to be an up candle or a down candle. That MACD crossover has absolutely no predictive value whatsoever. These are the kind of indicators that sit below the chart of the vast majority of day traders and swing traders. Now, they get really elegant Now, I've seen some real elegant charts. They use the Mcclellan Oscillator, and there's a whole bunch of real elegant oscillators. Obviously, a lot of them look for big moves away from mean. So they look for a move that's many multiples away from the standard deviation, 2 or 3 standard deviations from the mean. But that is not enough to call a turn, because you can still get a 4th standard deviation from the mean. Bollinger Bands are all based on mean. And when you hit that outer Bollinger Band, you anticipate a turn. But I'll tell you, we've all seen price climb that Bollinger Band off the outer rim. It can go up for hours, days, or weeks. All that stuff has statistical predictive value, but really is not going to give us precise enough information to call a top or to call a bottom. Now, basically what we're doing with all these indicators is we're just looking at price. We're making an observation with a magnifying glass. We don't have any idea what's going on internally within the markets. It's sort of like a doctor who looks at a rash and is trying to make a diagnosis of why the area is red, and he just takes a magnifying glass and looks really closely at that rash, but it really doesn't tell him anything. What is required is that you do a skin biopsy and you determine on a cellular basis if there's any organisms in the skin, what kind of inflammation is being caused, if there's any vascular component to the inflammatory process. This is what gives us a diagnosis. You have to go a lot deeper than just a superficial observation. This is what all the indicators that we use do. They simply create a superficial observation of price, whether it's moving up or moving down, but give us no deep assessment as to why they're doing what they're doing. And that's what we need to know if we're going to have predictive value off the right edge of the chart. We need to look at the internals, just like a doctor needs to look at a biopsy. That's the key to determining the future direction of price. It's the key to making a diagnosis. Now, we're going to look with that microscope. Now, it may be an electron microscope, it doesn't matter, but we're going to look at all of the metrics that are going on in the market, and that's what's going to give us our answer. Obviously, it's going to be based on more than one independent variable. In this particular case, it's going to be based on market internals and market structure. They interact dynamically, and we have to use them both. But you're going to see that we're going to get real gorgeous low risk setups if we take them both into consideration. Now, we're going to move from being a passive observer, which is what the MACD and oscillators and all this stuff does, even moving forward to the, like I said, the Mcclellan Oscillator and all of these very, very complicated formulaic indicators. They simply create a more elegant way of passively observing price. They give us no deep dive or understanding of price mechanics. And what we want to do is we want to gain predictive power. The only way, in my humble opinion, to do this is by tracking the directional flow of institutional money, because that's what drives price, and that's the only thing that matters in the market. Where is big money pushing price? We have to track it and trade in the direction that they happen to be pushing it. Now, again, I just wanted to put up that chart. I know that there are people, there are traders in here who are new, and We're going to be looking, whoops, daisy. The chart went right behind the slide. Just going to pull it out. We're going to be looking at two key fundamental metrics. Now, the top one is advancing volume, and the bottom one is declining volume. Now, if we look at the S&P 500, we have 500 stocks. Now, if 500 are moving on advancing, I'm sorry, if 250 are moving on advancing volume and 250 are moving on declining volume, then we will have a ratio between the two of 1. That's parity. This is what this assessment is constantly doing. It's looking at the ratio between the two. The bottom line is going a little bit deeper on ticks because we have stocks moving on uptick and stocks moving on downtick. And from that, we create an advanced decline line based on that assessment. We take that one step further. We do that with volume. We determine an advanced decline line based on the number of issues moving on up volume versus number of issues moving on down volume. Now, Sergio is in the process of rewriting the entire code, because what we want to do is we want to give this assessment more granularity, and to try to give you an understanding of what that is that and I'll show you what that means in a second. So in about 4 or 5 days, you're going to get a completely new system, which is going to be more precise than the one that you have. And I'm going to show you how we're doing it. I mean, he is really busting his case on this code, I have to tell you. And he and I have spent a lot of time looking at this. And, you know, we found some disparities that we're unhappy with. And it's really because of the granularity of the system. I'm going to show you exactly what we're doing. Now, this system has not been done before. I have never seen anything like it. And I don't think you're going to see anything in the future like it because it's so difficult to code. Now, if we look here at stocks moving on advancing volume over stocks moving on declining volume, it could be on the S&P 500, the NASDAQ, the Dow, the Russell, the New York Stock Exchange. It doesn't matter. You got a basket of stocks that's defined by the market that you're looking at, and you want to look at the ratio of stocks moving on up volume versus stocks moving on down volume. Now, if that ratio is not one standard deviation away from parity, you can see this is the S&P 500. His parity is 250 over 250. Half the stocks are moving on up volume, half are moving on down volume. Now, as we start moving up, we're going to get a disproportionate number of stocks moving on up volume. But let's say the ratio is 300 to 200. Is that ratio, is the disparity in the numerator and the denominator enough to call a market direction, or is it simply within the normal harmonic of the market where stocks are just sort of moving back and forth between up volume and down volume because they're just being driven by us as small retail traders? So what we did, now you can do this simply by looking at a chi-square analysis. It's very, very simple. You can determine what ratio is one standard deviation above the mean and what ratio is one standard deviation below the mean. If this ratio is within the standard deviation from parity, the system will not call a direction because it considers that ratio to be irrelevant, the disparity to be irrelevant. It simply could be created by us, small retail traders, who are just jockeying the market around in price but yet do not create a sustained direction in trend. But when that disparity just skyrockets off the chart, moves to 2 standard and 3 standard deviations, that's when you're going to get a signal. Anything above 1 standard will give us a signal, because we know the disparity in stocks moving on advancing volume over declining volume is statistically significant. Now this blue line could shoot above that 1 SD line or below that 1 SD line. It does not make any difference. Now, let me just put these slides back from current slide. So in order for us to get a signal, we need to have an alignment in ticks and in volume. So the up volume, down volume ratio, with 1 being parity, and the uptick, downtick ratio, with 1 being parity, has to both agree, and they both have to be 1 standard deviation above the mean or 1 standard deviation below the mean. Now, what was very surprising to me is that you can get a tremendous disparity in up volume versus down volume, but not a huge disparity in uptick versus downtick. And to me, it just doesn't make any sense. Now, to try to iron that out, this is why Sergio is doing a recoding of the system, because I think that some of the disparity is just part of the innate. I'm trying to think of the right word to use. I know what the technical word is, and if I tell you what it is, and unless you took physics, you won't understand it. But there's intrinsic hysteresis in the system, and that is lag. And that's something that is absolutely unavoidable. And to give you an example, if you apply a force to a stationary object, when you first apply that force, that stationary object will not begin to move. So the force is being applied, yet for some finite period of time, that object is going to stay exactly where it is. Then it's going to begin to move. So if you apply a force to an object, it's not going to move the instant that you apply the force. And that in nature is called hysteresis. And it's seen a lot with electromagnetic forces. They're applied to a current loop, and you get these electromagnetic forces, but no current flows around the current loop. And it's that is known as hysteresis. So what we're seeing in up volume, down volume, and uptick, downtick, sometimes with that disparity, is we're seeing hysteresis at work in the market. Now, the more granular that we make the system, the less hysteresis we will see. So in other words, we're going to be making a calculation between uptick, downtick, and up volume, down volume more frequently. And so it's going to be chugging out data a lot faster. And that is going to reduce the lag time between the application of the force and the movement of price. So that is going to make that disparity a lot less, although there is always going to be some, because that's an innate property of any closed system, and we see it all the time. So when you try to lift up a rock and you start applying force, that rock is not going to move until you really, even if force is equal, keep applying more force. It's not going to move for a while. So in order to sort of recap, and hopefully I haven't confused you, here we have an instance on the S&P 500 E-mini where here's the ratio of stocks moving on up volume versus down volume. So if the ratio is 400 on up volume to 100 on down volume, we're going to get a signal. It's going to be a buy signal. If we get a ratio of 100 on up volume to 400 on down volume, we're going to get a signal. So I just wanted to show you how that ratio comes into play. Now we're not, I shouldn't say, we're likely to get a signal, because we also need that same on the ratio of stocks moving on uptick to stocks moving on downtick. 400 on the uptick, 100 on the downtick, approximately 100 on the downtick, 400 on the uptick. Doesn't have to be obviously the exact same number, but it has to be one standard deviation above parity or mean, which in this case is 250 over 250. When we get them on both metrics, we expect to see a rise or fall in price that aligns with up volume or down volume. So if the ratio of stocks moving on up volume to down volume is one standard deviation greater than 1, and the ratio of stocks moving on upticks to downticks is one standard deviation greater than 1, you're going to get a signal below the candle. And that's going to denote the price is going to be pushed to the upside. If the ratio of stocks moving on up volume to down volume is one standard deviation less than 1, and the ratio of stocks moving on uptick to downtick is one standard deviation or less than 1, then that signal is going to be above the candle, telling you that we've got our market metrics or our market internals pushing price to the downside. So now we know more than the fact that price is moving to the downside. We know why it's moving to the downside. Now, the only thing that can cause this kind of disparity is big institutional money. Nothing can take 500 stocks in the S&P 500 or 2,000 stocks in the Russell 2000 index and align them with the vast majority moving on downtick on down volume, except big institutional money. So when we see that signal above the candle and it involves the Russell or the S&P 500, we know that that must be telling us that big institutional money is applying a lot of money to the downside to get the vast majority of stocks down ticking on down volume. And the futures market is going to move down, and the vast majority of stocks are going to move down. Now, how far they move down is going to depend upon their relative strength. If a stock has tremendously powerful relative strength for the day, even if it's green, it will retrace. The stock has really poor relative volume and is already heading down, it'll head down faster. What it tells us is not to take a long trade or not to take a short trade. And we're going to look at that. Obviously, that's really going to be the basis of the whole master class. I just want to show you what we're doing so you can understand it a little bit easier. Now, this is recorded, and if you didn't internalize that really quickly, don't worry about it, because really the resultant data that you see is really what you need to know to trade. If this confuses you, and I'm sure a lot of people understand it, and some people are confused by it, I'm telling you, I will be redundant enough so that eventually everyone will get it. But the key really is to understanding what we're doing and how we trade, because although this is one major force, we have to also take into account market structure. That is a key. We use this in isolation without market structure. It's going to be helpful, but it will not have the predictive value we need to trade. Now, here's the ratio of stocks uptick, downtick. This should be stocks up volume, down volume. Sorry, I reversed these. But the Dow Jones Industrials will have a green box. Now, eventually, when Sergio's done fixing the granularity of the system, and let me tell you, that is a huge project that I gave him. And he's the one that came to, I saw the problem, but he's the one that came to the conclusion as to how to solve it. And it really involves a tremendous amount of coding. Now, every now and then the system sticks. Now, we are going to totally eliminate that problem, because what we have to have is the system via individual coding draw these boxes. Right now they're being drawn sort of in toto, and let me tell you, I'm not as familiar with the coding as Sergio, but we're going to rotate how each of these boxes is drawn so that you get a seamless flow of data. Now, it only sticks occasionally, but we're going to eliminate that altogether. Now, the Dow Jones is going to give us a green box, New York Stock Exchange a red box, the NASDAQ a blue box, the Russell a yellow box, and the S&P 500 a cyan box. If they're above the candle, the internals are pushing the price down. If they're below the candle, the internals are pushing price up. And we know there's significant force involved. Now, again, just to recap, I didn't put it in a box. I sort of put in a rectangle. This just should be a box. Here's the Dow green, NYSE red, NASDAQ blue, Russell yellow, S&P 500 cyan. Now, eventually, we're going to move the text into the box. That takes an enormous amount of coding. The granularity of the system takes precedence because it reduces lag time or hysteresis. So that's the thing we want to work on first. You're just going to have a key sitting next to you. I mean, you're going to know some of the key markets. Obviously, the S&P is looking at 500 stocks. The Russell is looking at 2,000. That's the NASDAQ 100. The Dow is looking at 30, and the New York Stock. I don't even know how many stocks are on the New York Stock Exchange, to be perfectly honest with you. But these are our key markets: NASDAQ, Russell, S&P 500. They're looking at an enormous basket of stocks. But I'll tell you, the Dow NASDAQ combination is really shown to be very powerful. This blue-green combination in moving price. So maybe it's because the stocks on the Dow are big, and for big institutional money to move them, they have to use a lot of loot. So I can't tell you why, and we don't have to know why. As long as we're able to assess if there's any unique combinations in color. But in general, the more markets we recruit on a long and the more we recruit on a short, the better the trade is going to evolve. Now, here's your candle, and right below it here, we have every market except red. We're missing the New York Stock Exchange. So we've got the Dow, we have got the NY, we've got the Dow, and here I have this thing, I have my cheat sheet and it's wrong. We've got the NASDAQ as blue, the yellow is our Russell, our cyan's the S&P 500, and boy, the likelihood of this candle closing to the downside is exceedingly small. All of the stocks, these are thousands of stocks, are all moving on the majority on the uptick and the majority on up volume. If you're trading the futures market, it is very likely to go long as well. I mean, you know, obviously we can only trade 4 futures markets: the Dow, Russell, E-mini, and NASDAQ. So let me just show you a couple of trades, and then we're going to move to the live charts. And then at this point, I'm going to stop and answer any questions. Now, I've shown this slide before. It's not new. I added a few additional slides because we do need that multi-time frame alignment and trend that I stole from the money flow tracker in order to take a trade. But here, as long as we go long above the 50, short below the 50, 50's trending up, we're adhering to certain market structural rules, and we get a gorgeous trade off the upside. Now, really, you could have taken this trade long. See this blue-green combination? When I go through a whole bunch of stocks, I see this blue-green all the time. And I wouldn't think it would be as powerful as it is, but the NASDAQ and the Dow, for some reason, just love to sit together. And when they do, price is likely to rise. Now, if you take price right off support, it's not going to go straight up necessarily, and you lose your internals right here. Now, optimally, you may want to have taken the trade right here on a 4-box entry, but you're a little bit off support. So we really have to determine how far off support we're willing to go, knowing the tighter we are to support, the better the trade, but also understanding that the number of boxes recruited on the trade make a huge difference. Here we've got every market except the NYSE. We don't have a red box. We've got the Dow, the Russell, the NASDAQ, and the E-mini. And this thing just flies to the upside. This is 49 3/4 points. Now, we have tremendous predictive value. It's not enough that the trade evolved to the upside. What's important is we know the forces that were being brought to bear on each candle as they evolved. We're not looking at a MACD crossover. We're not looking at stochastic, assessing momentum to the upside. They have no value. We're not looking at price action. We're not looking at Fibonacci because that's useless. Price is going to rise until big institutional money steps aside. Not when you hit a level of Fibonacci resistance, and price is not going to go until you get there. It's going to go until big institutional money steps aside. Now, I closed this trade or I scaled it when I knocked off price time here, but this was the end of the trading session. So it ended like this. You don't want to hold overnight. We just closed the trade. Now here's really a great trade off the Russell. Now you could have taken it long here. Now you want to go long on an up candle, obviously. Again, you have the same sort of dilemma, and really, let me tell you, there's really no solution to this. The more boxes you recruit, the better off you are. Now, right at 9:30 at the open, what I found is that there's a lot of shuffling going on. Remember, pre-market, an enormous number of traders place orders to be executed at the open. It's a really dumb thing to do, but a lot of small retail traders do it. So for the first 10 minutes or so, you're going to see a lot of wobble. Now, throughout this move, market internals are always poised up. Now, you don't really want to take much heat on the trade. That's the thing. So if you get into the trade right here, you're not going to lose the trade because your stop is going to be one tick below this wick, and price never comes down and hits it. So you're going to be in this trade, and you're going to get this trade all the way to the upside. And I can tell you there's really no great formula for determining the optimal entry because of this unfortunately is some discretion. Here, this yellow and blue combination are also really strong. You've got the NASDAQ and you've got the Russell. That's an enormous number of stocks right here. You could take the entry right here. Now, you're off support. And if you are, you will always face a potential retracement to support. You're going to take some heat, but up it goes. So we can call a direction with tremendous precision. And I'm telling you, you can look at a whole bunch of black box systems that have all these arrows that are going to give you exact entries. But I'm telling you, there is no better way than to take an entry when the market internals are all moving in your favor. Now, this is your perfect trade. The candle is sitting right on support on a 3-box trade. You have the NYSE, you have the S&P 500, and you've got the green, which is the Dow. And up you go. This is a no-brainer trade. You're trading right off support on a 3-box entry, and you never take any heat here. You're always going to be trading in the green. And this is a trade you're going to hold. Time is here. That's 1600 hours. You're going to close. You're in the trade real early in the morning. And I would always would be careful. I mean, I would be more inclined to take the trade right here on this pullback after 10:30, because I know that the market's equilibrated. All those buy-sell disparities are gone, and this is when big institutional money likes to step in and start pushing the market. So you could have ridden it up, you would have ridden it down, and then up you go. Now you can always get a retracement when you have all the market internals with you. That's always a possibility. Now I can't tell you why it happens when you've got the vast majority of stocks on the uptick, on up volume, but it happens. And you have to note it because market structure is a part of what we do. We call a direction, and we know the only direction we can trade here is long. And we start recruiting markets here like crazy. I mean, when this thing is pushing up, I mean, and then into the close, you start recruiting more again. Now, this is a 267 tick trade. Now, I think this might be a new one, but here's a 4-box entry. You've got the S&P 500. You've got the NASDAQ. You've got the I'm missing that blue color. That's the NASDAQ. You've got the Russell, and you got the NYSE right here. And you can see you get a tremendous push to the downside. That's a 118 tick trade. Now, if you stepped aside when you lost every single market internal, you would exit on this candle. And once you do lose it, price starts to move sideways and sort of directionless. And that's when you'd step aside. So in general, that's about the bottom of the trade, right around 118 points. Now here to the upside, this is really a terrific trade and just a terrific morning. Now, you can take the trade here. This is fairly close. And if I was trading the markets, I would have taken it here. Now, it would have come back to support. And what you have the option of doing is adding a contract, because you've got a 4-box pullback. All you're missing is the NYSE. The likelihood of bouncing off support is extraordinarily high. You add a contract, it heads up, retraces right back to support. You add another contract, and then up you go for 148 points. It's actually over 148 points. You close, I mean, I didn't even mark this trade closed at 1600 hours. I should have. You wouldn't have made 148 points if you closed it. And it should have been closed at 1600. I closed it at 1700 hours, we are not going to hold past 10 to 4. We're going to get out of the trade. But every retracement has a tremendous chance of bouncing off support. And isn't that the key that everybody wants to know? Is a retracement going to break support and change direction? Or is a retracement likely going to hold its support and move higher? You got a 3 or 4 box pullback to support. That is a great place to either hold on or add a contract right off support and ride that move higher. Now we're always talking in probabilities. I think this is about a 90% chance of moving up higher on a move like this. You'll notice here we have background alignment. We have a multi-time frame alignment and trend to the upside. It's a gorgeous trade. Here, there's that magical blue-green again. You know, I'm telling you, I do see it a lot. Price never really comes right back to support. The boxes are sitting on support, but price hangs above it. So if you got in right tight to support, right here, you're gonna ride this trade all the way up. And it's a 29-point trade on the Russell. That's a big move for the Russell. I mean, that's what it's scaling at right there, 29 points. So I don't want to get into the hype that I think this is the most powerful software and trading methodology available to the small retail trader, but I do believe that. But I'm gonna jump off of this, try to close it, and I'm gonna move over my chart. Now we're in the process of making the system better. I mean, when I talk about granularity, I talk about precision and accuracy. And it's basically coming down to whether you're going to get a new assessment every 5 seconds or a new assessment every 1 second. And the faster this thing turns, the more likely you are to get an accurate assessment of market internals. And you see here today on the NQ, if we go to the beginning of the day, we got nothing. Now, at the time that the market opens, the NYSE has to open up right here at 9:30. We have nothing. We want to only trade green background, and we must have this proprietary 15. It's a 15 EMA with EMA smoothing above the 50. So here we have no trade. And when we finally do get it above the 50, we're getting a retracement. And eventually internals rotate. Now they're above the candle, and it's the yellow box, and that's the Russell. And that's telling us the Russell's aligned to the downside, more down volume and more stocks down ticking. We have no trade anyway. We got nothing to trade. Now, here we're way off support, and I would not trade 50 miles off support, especially with the 15 not having crossed the 50. Now, the key to any system is waiting for the sweet trades to appear and not chasing trades with any inherent risk. Now, you're going to be watching multiple markets. We're just a couple days away from releasing the scanner. Now, Sergio rotating to changing the whole coding of the system, it's going to put the scanner off by about 2 or 3 days. But I think it's worth it to make the system. I didn't have to bring it up, but I did want to let you know you're going to get up. Many of you have come aboard. I want to let you know you're going to be getting a better system. I would not trade anything here. Now here's your trade right off support. This occurs at 15:30. That's 4:30. So you don't have much time here, but boy, oh boy, this is a great signal. Now you see that dark green, there's the Dow. You're trading the NASDAQ, and that cyan color is the S&P 500. S&P 500, S&P 500. Now you recruit the dark blue, and that's the NASDAQ. And man, does this just rocket price right into the close. And that's today. And you're going to take this trade out at the close. You're not holding it overnight. You have to trade an up candle. So you're going to take this candle right here. It's relatively tight. And you're going to close it right at the close and bag 73 points just by waiting for a sweet time to trade. Now we can go back. No background color, don't even look. Look at this trade right back to support. It retraces, will support hold here with price just touching the 15 and the 50. You have a 4-box signal telling you yes. You take this trade up. I'm going to scale it. Now, this is maximum excursion. You're never going to get that. Now, what I have, and I watched this really for the whole day. You need an automated trade management strategy. Now, we're working on that. Because remember, every single instrument, depending upon the time frame that you trade, every stock is going to have a different ATM. So they're difficult to calculate. But if we got in here and we had no ATM, our exit would be right here. This is where you get a market internal against you. And you would wind up with 62 points. Now it's above the candle. And you are getting out right away. Look at that next signal. 3 boxes against you, 2 boxes, and price is just driven down by the market internals. So as soon as you get that reverse, you're gone. You still make 62 points. That's 240 ticks on that trade. Nothing, because you have no dark green. Now, I'm not cherry picking the market. What I'm trying to do is just give you strategy. I'll be more than happy, when I open up the chat, which is going to be very shortly. I'll put up any market, any stock, and we're going to see right away whether we have a trade. And we're going to see whether we have a trade right off support, and we've recruited enough markets in order to make that trade safe. What you're going to see, it's very hard to find a loser. Now we got nothing here. Now we looked at this, and I believe the problem on this trade was the granularity of the system. We weren't calculating. You see, volume is red, down volume on all 5 markets, but the down ticks was not. And I think that tick data was a problem because again of the rapidity with which the assessment is made. And I think when Sergio finishes recoding, we would have gotten a short trade right off of the 15. But we'll see. Maybe that just wasn't meant to be. Here we have nothing. But actually, we're starting here. Look at this trade. Now, this is a 4-box entry. Now, on the entry, the 15 is red. It's going to drive down. You could have gotten out right here, but you don't have any market internals against you. And when they're all neutral and you've got this multi-time frame alignment to the downside, you can still stay in the trade with fairly low risk. And you see the lines below, and you see that you have a predominance of down volume on all 5 markets. It's the down ticking data that we're missing, and we may get that when we modify the system. In either event, once it starts moving sideways, you're going to bail. 118 points. So let me go to the chat. I could do this all day. That's a small trade. A lot of these you've seen. And, you know, we could go to any market. I mean, the likelihood of taking a loser, if you're careful with your market structural entry, is very small, because you know the direction that price is going to move, because we've done that skin biopsy, and we've looked at market architecture, and with that architecture, we can determine exactly what's going on. We can determine the physiology of the market, and we really can make a great assessment as to future market direction. Now, I have it set on a 5-minute. You'd set it on a 15, a 30-minute. The time is absolutely irrelevant. So why don't I just go over and I'll answer any questions that you have. I'll look at other markets. I'll show you one stock I saw today that just gave a beautiful signal. It was Avago. Now, when you have the scanner, you're going to be able to look at huge numbers of stocks. Wait a minute, it'll load. Now, right here is where Avago comes. You can see it just shoots off. You just can't trade the open here. It opens right around here, actually right here on this line, right in there. You can't chase this up. You gotta wait for a retracement back to support. Now, when it retraces right back here to support, it's a little rickety when you first start. I have to tell you, I would have taken this trade. I have my my yellow, which is the Russell 2000. Now I don't have the Nasdaq, which is what Avago is on, and I would really like to see the Nasdaq, and that's blue. But you can see how it skims along here. Now right here we wind up with the Dow trading against us. We have not broken support. And then quickly everything moves right here. Obviously, this would have been a better entry right here. Now, we don't have the dark green background, which honestly is really optimal. But we've got so many markets recruited. Again, it comes back to support, and then it just shoots up. Now, this is not a low-risk trade. I'll show you another one on Avago, which is a lot lower risk. Now, this is after market hours. Oh, this is 935, but I'm telling you, this is a very tough trade, way off resistance. Just because it looks great and would have been a winner doesn't make it a great trade. Here is a really nice trade on a pullback to resistance. And then you get that nice move down. Avago is a real big mover. I saw, see, this is a potential winner. It's not perfect, but you can see how here it is. Look at this pullback to support. That's a 4-box pullback to support. And you're sitting right on the 15. Up you go. This is almost a $6 move. You've got an at the money weekly call here. This is at least 100% on this move up. Even though it's a $500 stock, and it's going to be very hard for you to buy a call, you could sell a credit spread and you would make great money on this trade, as long as it was a bullish credit spread. So this was a terrific move to the upside. So you just have to wait for your trades. It looks like I did a little more kind of hunting around here on Avago than I thought I did. It's a big mover. Now I'm going to just run out of days. So let me open up the chat. It's a very unique system. Obviously, if you want to trade, you can always add an additional indicator, but I'm telling you, I don't see anything to add. You trade off support or resistance in the direction that the predominant, obviously, you want as many market internals in your favor as possible. Support or resistance is very likely to hold, and you see you very, very rarely get a loser. So it's really calling market direction like nothing else. So let me just pop this and go to questions. Now we will very soon have a more powerful system that on tick data is doing an assessment much more rapidly. So our tick data is going to be more accurate, and by getting that assessment more, with greater rapidity, we will be able to call price a lot faster, and I think with a lot more precision. I mean, listen, we built the system in the dark. It took us 2.5 years of failure for us before we got it right. And I'm not kidding. We released 2 or 3 versions where that basically just failed. And they just didn't do a good job until we finally got it right. So just hang on one second. I just want to get some water. Now we will be releasing a scanner, which is really going to be very, very good. You can set it for a 1 box, 2 box, 3 box, 4 box, or 5 box entry. You can pick the boxes that you want. Let's say you only want to look at the E-mini, the S&P 500, the NASDAQ, and the Russell. And you don't want to look at the New York Stock Exchange. And you don't want to look at the Dow. You don't have to, that will not become a component of your signal. So you can pick the number of boxes. And obviously, you're going to put in there whatever financial instruments you want to trade. You can trade futures, you can trade stocks, you can trade anything that you like. And you can track as many as you want. I mean, obviously, I have 500 tickers, which really comprises the vast majority of stocks that I want to track. And I'll tell you, my options portfolio has just been whacking it every day to the plus side. I made a lot of money today trading options. Now, just let me see if I can find a big mover. I'll just put it in, and then I'm going to answer any questions. We got into Hess today. I'll just tell you that. I looked for an entry on Hess on a pullback. I got filled. I take all the trades I put out, and boy, did we get a nice entry on Hess. Let me tell you. You have Lockheed Martin. It was up $4.93. I mean, we're really ringing the bell. I'm telling you, in these markets. I'm overweight energy, which to some extent is not the greatest thing, but we're making really nice money. I'm just trying to find something that moved up a lot in my whole thing here that I could show. I mean, if the thing moves 60 cents in the whole day, there's not going to be anything to see. It won't be a stock that we could have day traded. And I'm trying to look for something that moved a lot here, and I don't see much. I'll look at anything you like. Let me just go down to the bottom here. I mean, the biggest mover in terms of dollars was Avago that I watch, and Pinterest was up 15%, only up $3. I'm not going to bother with it. Now there's really not much here. Now I don't have the biggest percent gainers and the biggest percent losers. I only have the stocks. Man, we missed an entry on Alliance Resource Partners, which is coal. I'm telling you, we can't get that freaking entry, and we're going to lose it. Now, let me just see if I have this ticker. So see this, I would not trade this on a 5-minute. Got it. It's Milko. See, a 5-minute is probably not going to be great for the stock. Let's wait for all the data to come in. So you have, you know, obviously we've got to rescale the signals, and you can do that really easily. This is a really cheap stock. It's a $5 stock. Now we bought a $5 call that expires in 2020, the end of 2022, and it's approaching $6. And we're doing really well with it, but it's just not giving us great signals because it's too cheap, and 5 minutes is too much of a time frame to trade a stock that is that cheap. The market internals are signaling right here for a long, but it's just not, you know, it doesn't have the volatility that we need to trade. It's just too cheap. If you wanted to trade this, you'd have to trade a 1 minute. I think you'd get some nice signals off of that. And but I'm not going to rotate to a 1 minute right now. We can look at Apple. That's the number of shares crossed per day today. Now, a nice trade into the close up here. Here, the market internals are against you. Here, they're with you. I mean, it's a rickety day. It's not a great day to trade Apple. Now, here's a very nice short trade right here. And you've got the market internals, and then they turn and you're out. It just so happens it still goes back down again, but on a statistical basis, we've got to exit the trade. Boy, Apple was really sort of a mess. You don't get a very, very nice, but look, we can look for a really nice signal on Apple. And we would tighten the space here, which is really easy to do. All we have to do on Apple, if we go to the Dominator, is just, here's the signal offset, which is 10, and we can make that 5. And it tightens everything. So now we've got some, you know, so it's a lot easier to read. We just don't see anything great. This is a gap. Here's a great pullback and move up. Just doesn't move that much. You don't lose anything on this trade. You close it at 1400 hours, or actually 1600 hours. You actually get a nice trade right here. But here's your pullback. Here's your entry. You could have taken it here, could have taken it here. You have nothing. And you're going to close it out right here. So you make $2. Not a big move, maybe 10, 15% on an at the money call. Not much, but it's a single. You'll take it. I'll take it. Here, the gap up, you can't chase it. Here, the 15 crosses right here. And you know what? This might be the first potential loser I found. Because now these 4 boxes do push price way off support, off resistance, but it's an awfully compelling looking trade to me. And this is a trade that I might have taken. And honestly, it's the first loser that I've seen on Apple at 2 o'clock in the afternoon. And then we run out of data. So Apple is very volatile. It's been hard to trade. Now, Apple may be better on a 15-minute. We'd have to experiment with it. 5 minutes may be a little too fast for it. Only we would have to. This is one beautiful move up. I got to tell you, right here, and you're out right here when every internal turns against you. But that's the next day. You're going to close it out right here. Now, again, this is a little bit of a move all the way up here. You take the trade right here on a move right off support. And I'm just pointing out what I would do right here. All you want to do is make money. You don't have to hit a home run. You're going to close it right here. Now it's less than $1. You know, it's maybe a 10% trade. If you sell a credit spread against it, maybe you'll make 10 to 15% on a one-day hold. Not bad. You know, it's not a bad trade. The big thing is you don't give away any money. And the problem is the gaps. And it's good to see that some stocks are just a little more rugged to trade. And this is the first loser that I found, which is good to know, because I don't want you to think that that in any way this is a perfect system. Now, you can trade it after hours if you want, as long as you get data from the New York Stock Exchange. You won't get it for a long period of time. For some reason, I think Sergio, where's all the data here? See, he's cut out after hours trading. So all this time, it looks like it's seamless, but there's a big period of time where there is no data. So let me answer any questions. And the only thing I'll do is let's just move to the E-mini. Everyone likes to trade it. And we'll take a peek at it. And let's see if it gave us anything today. It's really tough. You're way, way off support here. A terrible day. Nothing to trade. Now, again, the offset here has to be modified because these boxes are too dispersed. I'm going to make them easier to read. The signal offset is 5. I'm going to make the signal offset 2. Now, that's moving the boxes tighter. You know, this is retrospective. It's still way off support. And it's just not a great trade. And we really want. Now, here's a nice trade. Well, that's an up, that's a down candle. This is a nice trade. Here's a nice trade. And you see I already scaled it at 9.5 points. I don't want to cherry pick these for you. And we're going to end this and I'm going to go to questions. Terrific trade. It's a little bit of a hanger, I'll tell you, but this is a 4-box signal. And I would take this trade. Down you go. It's 14 points. This is a beaut. I hate trading these big candles, but no. Let me see if you. I don't think you have. Let me see if you have any market internals here. You have nothing. So you can't trade it. Here's your first entry right here. I don't know why I put it here, but it's right here. Now we could tighten these internals even more, but I'm just not going to bother right now. Let me move it over. Nothing. I'm going to look for one more entry, and then I'm going to, I gave this as an entry on a pullback to support. I don't know why, but the market internals are coming up a little bit different, and that just could be Ninja Trader. Let me go to the chart and reload all historical data. Here we go. So let me roll it over. Now let's take a look. Now here's a huge move up. There's that blue-green right here. Up you go. This is 49.75 points. I think we saw this trade. So I'll look at any market that you want. Let me go to the questions. I know that there are going to be a lot of them. Now I know that when you look at other systems, they only show you the winners. I've seen that system where it just arrows, and every time you see the arrow, it always works. And there's no way that that's a real system, because you can't even see what it's doing. It's hiding everything. So it's a black box arrow. I don't want to mention the name of the person. I don't mention the name of the company, but the last thing that you want to trade is an arrow created by a black box system in which you have absolutely no idea what's generating it. And the only thing you get to see are the markets they show you. And they just will not go over a live chart. That is the kiss of death, I'm telling you. Because you're going to get crushed and chopped. Now, hang on a sec. Let me go through all the questions. Hey, Jeff, please give an example of trading micro lots. What kind of entries and exits can you do trading 10,000? I'm telling you, Jeff, if I put this on the micro E-mini, you're going to see pretty much the same chart. And I can. Let me just go to the futures. And let me go to the, I'll go to the micro NASDAQ because it's got the most volatility. Because it doesn't really make any difference. Remember, when you have the scanner, you're going to have the ability to trade every single index equity. You're going to have the NASDAQ up, the Russell up, the Dow up, and the E-mini up. Now you see this trade right here. This is on a micro chart. Now this is an absolutely stellar trade. Now I really can't tell you on 4 contracts how that's going to, the kind of equity curve you can generate, Jeff. But I can tell you this, and this is really the truth. It's really the day traders and swing traders that look for the home runs are the ones that bust out of the market. 95% of your trades are going to be singles and doubles. The key to successful day trading and swing trading is avoiding losers. And this is what the vast majority of traders do not understand. I'm going to take the time to show it to you because I've shown it before, but it's so critical. If you trade with specificity, In other words, you want to get every winner on the chart. So you're going to look for every true positive, and that's going to be true positives plus false positives. So then that equals specificity. Now, if you try to get every true positive, you're going to suck in 1 ton of losers. But if you trade with specificity, which is the way we trade and the way every successful trader, you're looking for the true negatives. Those are the losers. That's what you want to avoid. So the true negatives go over true negatives plus false negatives. Now, what's a false negative? That's a winner. So if you trade with tremendous specificity, you will avoid the vast majority of losers. The cost will be some winners will get by you. That's just the ultimate trade-off. It's the math. But if you can avoid the vast majority of losers, you can make a tremendous amount of money. Because remember, Jeff, let's say you start with 10,000 and you're up 2,500, you're up to 13,000, you're up to 13.5. Maybe you're going to add a micro future. So now you're going to be trading with 5. And you're going to let that additional contract be you always throw that in as part of the runner. You don't put that in as the anchor or your first target. You want to really monetize that extra contract. Then you get to 14,000, so you've made 4. So now maybe you want to throw in another micro contract, again, on the runner. So you compound your profit exponentially. And as long as you can avoid losers, you can really do it successfully. And that's the way the successful traders in the room do it. Start off very small, start off small risk with the micros, which is I like that, your position. Start accruing $100 to $200 a day, then 150 to 200 a day. All of a sudden you've got 700 or 800 a week. Then you bump it a contract, and that's how you do it. Now you're gonna hit losers. You're never gonna trade perfectly, but if they're few and far between, you're gonna do tremendously successful. And that's really how you do it. So it's always this key. Now I can take this formula way out. Density over specificity times prevalence equals positive predictive value. I don't want to do all that. I just want to show you that our goal is to avoid losers, to avoid every loser, not to get into every winner. And if that's your attitude, you're going to trade darn good. That's why if a trade doesn't come right back to support, you let it go and it winds up going 400,000 ticks. You're not going to cry over it or lose 1 millisecond of sleep, because the next 5 times it does it, it will lose. You take the trades right off support, right off resistance, 3-box, 4-box, 5-box confirmation, and you're going to be sitting sweet. You're going to have 4 index equities to trade. They all have micro contracts. You can leverage them on 4 instruments. You're going to get great trades off that. And that scanner, I just need Sergio to finish recoding this system. Okay. It's all being recorded, Jeff. So you will get it on a link. Hey, Jeff, do you have ATM strategies for trading the 4 micros? If so, can you example? How can we also get the 18 strategy? Well, the ATM strategies, Jeff, is something that I purposely left for next week. It's one of the most complex of our calculations, but for all the futures markets, we do have ATM strategies. And I can tell you right now, your first target on the NASDAQ is going to be 20 ticks, and your second target on the NASDAQ is going to be 125 ticks. Now, you may not make it to the 125, but if you get to the 125, it's time to pop the champagne cork. And I'm telling you, we've done retrospective analysis. That 125 is readily achievable. You're going to see, you're going to get it 2, 3, 4 times a week. So you take your first target out at 20, you take your second target out, let it run. That's what you need to do. Obviously, if the market internals goes against you, close the trade. You don't have to get a home run, but the home runs will come, and you'll start taking these trades out at 125. And on a micro, you're going to make an enormous amount of money with very little risk. So on all of those, we have those all for you. And I'm going to go over those in depth next week. Hey, Bart, does the coding give different weighting to the different indexes? You know, Bart, it does not. And that was what, let me tell you why it's important not to do that. Because that was one of the mistakes we made when we initially coded it. We purposely split each individual market out, because remember that the Dow is not market cap weighted. So every individual uptick, irrespective of the stock on the Dow, is worth the same throw weight in determining the ultimate market internals force. But every uptick on the NASDAQ is not worth the same. And that's where we're making a mistake, in that if you've got the FANG stocks all rocketing to the upside, they're going to drag those market internals to the upside, because they're going to drag price, but not the internals. Remember that the internals are just making an assessment of each individual tick. They're not giving it that throw weight. But by splitting them out, you get to make an individual assessment of each market. Now, remember I said the Dow seems to be very, very strong predictor of future direction. The reason I believe it's so strong is because it's not a market cap weighted index. And that green-blue combination will pop up, and you're going to see it often. And that's because the green-blue, the blue is the Dow, a non-market cap weighted index, and the blue is the NASDAQ, which is 2,000 stocks, but it is marked. Actually, it's looking at the NASDAQ 100. I'm thinking of the Russell, but the NASDAQ and the Dow make a really, really potent combination. So you have one market cap weighted and one market cap unweighted. Now, if we threw them all together, or we individually try to do that, there's no algorithm that can do it, because the power of each individual market's constantly changing. So it can't be done. That's why we're going to make that assessment. And that's why we need to. And that was the big mistake we made. We could never get the thing to work. And that was why we combined them all. And it won't work, Bart. Any thoughts to add information to the minute bars in the second panel other than the green-red on future development of the minute panel? I'm not sure what you mean, Bart, to add information to the minute bars in the second panel. I don't think so. I mean, I can't think of anything that's going to provide us with more predictive power. I truly don't. I mean, we can project the disparity in the ratio, but I don't really think looking at 5 different fractions with a numerator and a denominator, are really going to be of much value. And remember, intra-candle, they're going to be shifting dramatically. And you don't know what you don't know what that one standard deviation cutoff is. The system does. I can't think of any additional data, but let me tell you, we're always looking. And although I can't think of anything today, it may not be true tomorrow. I mean, I don't say that, you know, sarcastically. I say that. I say that, you know, deferentially. I mean, we're always looking to make the system more powerful. Obviously, we'd make it more powerful, you're going to get it. Does the order of color? No, Stephanie. Order of color is irrelevant. Makes absolutely no difference. Hey, John, that's a good question though, but it doesn't. Do the boxes appear under the under or below a candle? No, it occurs intra-candle, John. Remember, the assessment's being made from second to second. So you're never going to be sure, although you're going to be pretty sure of what the color is intra-candle. You're only to get a final assessment at candle close. That's why I always recommend you never trade intra-candle. And for 10.5 years, I have never taken an intra-candle trade. And I have seen 1 million traders in my trading room come and go who trade intra-candle. They try to get, you know, in 2 or 3 ticks ahead, and they will skyrocket their profit for a while, and then all of a sudden they vanish. Remember, each candle is the market. It's sort of like, you know, we're saying a sentence, and each of the sentences or each word comprises the sentence. And we don't want to cut off market expression in the middle of a word. So we have to let the candle finish. And you're going to see the colors evolving underneath. In general, I've watched this system now, you know, for a long time. And in general, those candle colors are fixed. And they, you know what I watched for a few hours today? I watched this NASDAQ trade, and I watched it move here right into the close. And now the micro is a little bit different than the fall. Let me go to the fall. Oh, no, it's not. It is the same. Here's where I was watching it. I think I might have changed it. It doesn't matter. It's going to come up, I hope. And I'll show you what I was watching. Let's buy. What I was watching, I'll show you in a sec. Wait for the metrics. I was watching it right here. Now, these market internals were not changing. Every box was exactly the same as the candle evolved. Then I saw this big candle down. Then I saw this up and this up, this down, this up, and this up. And then I saw down, down, down. Now you still have the market internals with you. Then they rotated against you. Then now we're into the close again. You have a very, you can start getting a lot of stutter. Right here is your great entry. I watched this entry. There's that green, the Dow. Here, that cyan is the NASDAQ. If I'm right, let me just make sure. No, that's the S&P 500. And boom, you got a great trade right into the close. And I watched these all develop slowly but surely. Now, the issue was, and the reason why I wouldn't have taken any of this was this is the number of contracts crossing per unit minute of time. This market was crossing no volume. And we're not going to trade unless we've got, you know, 4 or 5 or 600 contracts crossing per unit minute of time. We have to have decent volume. There was no volume. So in a low volume market like that, we really had nothing here. I mean, really, the market was deader than a doornail going into 1600 hours. But you're going to see it intra-candle, John. This is not going to pop out at you at candle close. You're going to watch it. And in general, throughout the whole candle, it will not change. I personally have not seen a market internals change color on an individual market throughout the move of one candle. Hey, Jeff, do we need NinjaTrader to get these charts? It will not work on Thinkorswim, Jeff, because the Thinkorswim does not provide us with the data. In fact, and I should let you know that Ninja doesn't either. Now, when we first set up the software, NinjaTrader said they did, but when we went to use their tickers, they lied. I mean, I don't think they lied. I don't think they just knew what they were talking about. So we have to buy a kinetic data feed. And I can show you what's driving my platform. It's going to cost you $60 a month. And what you have to do is you have to go to Kinetic. So it's going to cost you $60, but it's the only data feed that I have ever found that provide these market internals. And Sergio needs these tickers in order to code the system. So unfortunately, you're not paying us at setup. Sergio is going to set it up for you. He's going to set up your kinetic data feed. And he's going to show you what you need. Rory's going to help you do that. But in order to get this kind of sophisticated data, unfortunately, you're going to have to pay for it. And there's nothing we can do. Now, what NinjaTrader provides is very crude, and you just don't want to trade it. And it only comes off of 2 markets, the E-mini and one other. And it's Mickey Mouse data. They told us it was wonderful, but it's not. Hey, Grantham, please comment on percent return one can get. And listen, if you just cherry pick your trades, you really can sidestep the vast majority of losers. And remember, this is going to be traded live. As soon as Sergio finishes his coding, we're going to add this to the live trading room, and you're all going to become members. This is going to be traded live with a live account. So you're going to be able to see firsthand exactly how this works on a live market. So, I mean, the amount of money that you make really depends upon the precision with which you trade. And I think like I said, taking a conservative stance, cherry picking your trades, you're going to have Craig and myself showing you the best entries. So we're going to call them for you. So that's going to be obviously a tremendous advantage. So remember, in the trading room on the futures market, we're going to be trading Unorenco. Which is, I don't want to go into Unorenco right now. We will at the next master class, but it's a different. Obviously, it's a big change in candle. On stocks, we are still going to be sticking with time, but the amount of money you make really all depends on the trades you take. We're going to guide you, and we take the trades live. Greg Emery, I keep calling him Craig. It's Greg Emery, trades a live account. So does Dave Kushner. So does David Weiss. We all trade our own money. I mean, I got so much money tied up in the options market that when I wake up in the morning at 8 o'clock and I look at the tickers, my heart skips a beat. I have like 14 open positions. You're going to have the opportunity to swing trade with me. So we just got into listen, I'm giving you a great long. I'm telling you, this is a terrific stock to hold for about 3 to 3.5 months, I'm going way off topic, but I'll tell you why. The reason that Hess is so good is it's an energy exploration. I mean, it's in crude oil and it's in natural gas. And what is going to happen at the end of September is that Biden's already scheduled a termination of that 1 million barrels coming out of the of our strategic reserve. That is going to skyrocket the price of crude oil. The Saudis are also going to tighten the spigot going in. And this winter is going to be a very, very chilly winter for Europe. I mean, there are going to be people, unfortunately, freezing to death. I mean, I don't say that happily, but Hess is going to be a big mover. We were into it this morning, and we're going to ride it. And I'm looking for 100 to 200% on it. It's right off the system, but I also look at fundamentals. How much time we need to spend daily. Granted, we trade about an hour to an hour and a half a morning. And really, the sweet spot to trade is about 20 minutes after 9 to about 10:30, maybe a quarter to 11 Eastern time. That's the best times to trade. That's when big institutional money is playing around. Now, if you want to come back in the afternoon on your own and trade about 2 o'clock to 3:30, you can make some more money, but that morning is the key. Hey, Bart, my MI software does not have the painted background color. That's going to be corrected and updated, Bart. We just told Sergio to do it. We're going to wait a little bit of time because if he sends out a package with just the background and then he sends out a package with all the additional coding, it'll be 2 upgrades. So we're just going to wait about 3 or 4 days till he's done with all the new coding. You're going to get basically an entirely rebuilt system that will also contain the background color. So you'll have it, Bart. Hey, Jason, will the new upgrade support boxes still use Unorenco bars, or are you looking at real candles on your? No, Jason, listen, it doesn't matter what kind of candle. I mean, you can trade time, you can trade tick, you can trade Renko, you can trade Unorenco. That's totally up to you. The new upgrade will allow you to trade any kind of bar you want. So that is absolutely your choice. I mean, you're going to get a market internal assessment above or below every candle, and it does not make it. Remember, the market internal system is not looking at the candle formation. Now, Unorenco requires special coding. That's part of what he's working on. You've got to have a really smooth system. You can't have any granularity in the system for a Unorenco. And that's what we're going to be, and that's what we're doing right now. You're going to get a signal with every Unorenco bar, whether it's a 2 uni, a 4 uni, an 8 uni, and you can trade range, tick, doesn't matter. Hey, Gary, what symbols? You're able, listen, Gary, you can trade any stock you want that's on the New York Stock Exchange, S&P 500, Russell 2000, or New York Stock Exchange. So as long as we've got market internals data, so really the only stocks you can't trade are really the bulletin board stocks and the Canadian stocks. And sometimes some people will trade a Canadian stock. Otherwise, every stock. In the futures market, the only ones that we can trade are the ones that have a cash equivalent. And that's the E-mini, Dow, Russell, and NASDAQ. We can't trade crude oil because there's no market internals on crude oil. We don't have a cash crude market. We just have a futures market. So you can trade your 4 index equities and pretty much every stock out there. I mean, unless it's a 2-cent bulletin board stock, you're going to be able to trade the stock. Hey, Sathir, will this be introduced? We listen, as soon as Sergio gets out the scanner, we're going to automate the system. Automating the system is actually going to be the easiest component of the 3, because we're going to use the whole skeletal framework of the automated system off the money flow tracker, and we're going to bring it here. It's just going to require different triggers, but really the backbone of the system's already done. And this system will be automated. Hey, Robert, what service needs to be ordered from Kinetic? You know, Rory knows, Robert, but it's the basic package, and then it's $2 more to get all of the metrics that we need to get up volume, down volume on the NASDAQ, up volume, down, uptick, down tick. They're cheap if you have the basic package. So he'll you know, at 7, what's that, Rory? Yeah, Rory said we're going to start with the basic, and he'll build it out for you, and it's going to cost you just a couple of bucks more. That's all. I think it's $2 more. But don't worry about that, because that's something that we do here for you. Once we do it for you, you're going to see all the tickers, all the symbols, and it, you know, it's going to be really clear and obvious what you need. Hey, Larry, if you are trading 2 contracts, when do you take off the first target, or do you hold? No, you'll. I'll give you my strategy for trading, and it doesn't make any difference what you trade. This is how I've been trading. Listen, I've been doing this for 10.5 years, and I really have a good idea. You're gonna have 2 lines, okay? I'm just gonna copy this and move it down to here. So let's just say you're trading 2 contracts, which is what you mentioned. So obviously we're going to have a stop, but we're not going to worry about the stop right now. So you enter the trade. Now you always want an anchor. The anchor on 2 contracts is 1 contract. And the reason that anchors the trade is because when this takes out your first target, your stop moves to break even, and you're now in the trade at no risk. Now you're sitting with 1 contract, and you can't lose money on it, no matter what happens. Now, we have a sophisticated trailing stop, but you still can't lose money, even if it comes all the way back here. We're never going to let that happen, but you can't lose. So let's say on the NASDAQ, our first target is 20 ticks. That's anchored the trade. Locked in on 1 contract, you've made $5 a tick, $100. Now we're going to look on the runner for 125 ticks. If we hit it, we make about $650. Add the 100 on the first, that's $750. And let me tell you, it's the key is the anchor. Now, let's say you decide to go to a 3rd contract. You don't use it as the anchor, because if you get stopped out, you're going to get stopped out for the full amount. What you want to use it as you throw it in as part of the runner. So now if you get 125, you get 125 times 2. I'm telling you, using those metrics, you will make the most money. You anchor the trade, and then as you add additional contracts, obviously if you're up to 5, you'll anchor with 2 and you'll run with 3. But that's the strategy, and I'm telling you, you're going to make the most money. Now, for each of the index equities, our anchor is different. For the E-mini, it's 7 ticks. For the Russell and the Dow, it's 10 ticks. And we're not going to look for 125, we're going to look for 80. Well, we have all those metrics all set out, and they're going to be in your automated trade management strategy. So you can always modify it. It's up to you. But by using this these metrics and understanding that you get your anchor, you lock in profit, and then, you know, you cross your fingers and you hope you get that monster runner. You'll lock it in with one or two, and man, you're done for the day. You may be done for the week, you may be done for the month. I mean, who the heck knows? That's what you want to do. People that front load the contract never wind up with the appropriate metrics on a big winner. And here's the last thing I'm going to say, Larry. If you do it this way, when you take a loser and then you wind up with a winner, if the winner just goes a little bit past your anchor, you'll wipe out the loser. If you do it the other way, where you load the contract on the first target and only run with one contract, you won't take out the loser. That's the way to just blow your loser away. Now, how do you get aftermarket data on Ninja for stocks? Aftermarket, you can't get any, Larry. For these metrics, they only come through, Larry, when the New York Stock Exchange is open. I don't know why that is, but that's just the way the metrics are done. I mean, you know, we can't defy the laws of gravity. When the New York Stock, when you hear that bell ringing on the NYSE, the data starts. When you hear that bell ringing on the NYSE at 4 p.m. Eastern, the data stops. You want to trade after hours, you can't use this system. My recommendation is sometimes you can get great trades after hours, but I'm telling you, you should be able to do exceedingly well during the market day. You've got 4 index equities to trade. You can't pull down some low-hanging fruit where the fruit's like sitting off the ground. Like, Rory, what's that tree in the backyard of my house? Yeah, I have a mango tree in the backyard of my house. You know, you go for the mangoes that are like 2 feet, 2 feet off the ground. You don't reach for the big ones, and I'm telling you, you're going to get some gorgeous mangoes, man. You have 4 index equities, and you have 8 hours if you want to trade all day, 7.5 hours, and you're going to get some beautiful trades between, say, 9:45 and 11:30. Then if you stand down for lunch and come back at 2, between 2 and 3:30, get some stellar setups. Hey, Dwight. Thanks for the presentation, Mark. Will this be combined with the money flow or should be? Well, we're going to try to create a hybrid, Dwight, but for now they're standalone platforms because, but you're going to see, listen, I have a vision. So just relax. I'm telling you, I want to create the best system possible for everyone so we can all make money. And if I have to combine the systems, I'm going to do it. I just think that this data makes like the multi-time frame analysis of momentum. It may make order flow. It makes some of the calculations we do unnecessary because it doesn't add to the predictive value of the entry. So what Sergio and I have to do is sit and see what is really required to add to increase the precision of the trades. Now that's going to take some time, but as we do it and the system evolves, you will get all the upgrades. That's our philosophy. Let me just quickly, I'll just show the offer and then I'm going to answer all the questions. For people who don't have the system, if they want to come aboard, we're going to give you a really nice spread. I'm telling you, when we build the system out, I kid you not, and I'm no marketer, we're going to sell it for a lot more than in $11.97. When we've got this automated and we've got all the bells and whistles attached, it's going to be much more. You come aboard now on $11.97, you're going to get all the bells and whistles. They'll all come with it. So I'm just going to throw that out. that gives you every upgrade and add-on that we make for this system for life. And obviously, you're always going to be welcome. I'm going to try to do a master class every week, especially as the system evolves. Even if we don't have anything new, what I'm going to start doing is looking at great stocks, great entries, point them out, look for losers that, might have blown up in our face. That's what I want to do all that discussion in these master classes. So the scanner is coming very shortly. The new coding is coming very shortly. And we're going to automate it very, very soon. So I just want you to know that. Hey, Mark, do we get this if we have you have the other system, William, you get a huge, huge discount. Rory will talk to you about it. It's very small. Which platform is this? This is NinjaTrader, Mark. NinjaTrader is the only one that can handle it, because it's the only one that allows us to hitch a ride on Kinetic. And I have not, and let me tell you, Sergio and I Googled the entire internet looking for another data feed that provides these kind of metrics. There isn't any. I mean, zero, zilch. Some of the data is provided with the platforms, but they don't make it available. Like, we can't access it. So this is the only platform this can be traded on. I mean, that is a restraint, but the data from Kinetic, with the way that we're, with our modified coding, is absolutely stellar. And they really stream it at an incredible rate. It's very precise. So for $60, I'm telling you, it's worth the price of doing. It's worth the price of doing business. It's one single trade. I mean, it's not. I mean, you get a single off the Nasdaq, you get $100. So you basically paid for your data feed for the month, minus $10. Have you considered a web? You know what, Larry? We spent 2 years creating a web-based system. But let me tell you, it doesn't work. I'll tell you why. And the reason is that any cloud-based system creates lag. It may be a couple of milliseconds, maybe only 1 millisecond or 2 milliseconds. But man, we got complaints. I mean, I felt like disconnecting the phone. I mean, we wasted 2 years of putting this system in the cloud. Now, I know that there's some platforms that do, but I'm telling you, they lag. Now, they may not lag all the time, but they're going to lag sometimes. And when you're looking for a precise entry on a fast-moving market, like after earnings or after crude oil report, you have your software in the cloud. It is going to lag. The best thing, I mean, we did it. I mean, we were successful. We had an awesome cloud-based system. We had to shut it down and go back and put it on your computer. That is the best place for it to be housed, Larry. You will get no lag on the system as long as you have an average system. I don't have any great system. I have a Hewlett-Packard. Sergio built it for me, but it's got no great features. Don't spend like $12 million on these trading computers. You don't need them. But you need the software on your computer. And cloud-based systems, I'm telling you, will always provide you with lag. They sound great. And we do plan on automating it. I joined early August. This is available. Stephanie, just call Rory. He'll talk to you about that. Because I don't even know the answer. He does. So chart bias is not as important with 5 minute. No, Steve. Chart bias is very important. You definitely want to trade when the multi-time frame alignment and trend is with you. I'm telling you, it's going to increase the positive predictive value of your trades markedly. When you have 3 time frames aligned to the upside, the value of, say, this entry signal is much more powerful. than if you get this with no background. So that is very key. Remember, you're trading a 5. This is looking at the 15-minute and the 45-minute. They're all in alignment. The 50's up on both. The 15's cross the 50 to the upside on both. That's that dark green color. Another thing that I want to go over in a master class soon is what generates the different colors. The light blue. Serge and I were thinking of eliminating all the other colors, just projecting dark green and just projecting dark pink. Because you can see, this is after hours. You can see how when you have a multi-time frame alignment and trend to the downside, how likely it is that price on your trading chart is going to fall. You get a market internals confirmation near resistance here, this thing is going to take a big nosedive. So it really, really is important. Okay? Nothing, remember, Steve, don't ever try to trade against market structure. And that multi-time frame alignment and trend is part of market structure. Futu is up today. I don't know what that is, Stephanie. I'll put it in. That's a new one for me. F-U-T-U. It's not coming up. Let me put it in my on my Thinkorswim app here. I never heard of that ticker, but let me look. F-U-T-U. F-U-T-U. Hold on. F-U-T-U. Futu Holdings. Let me look at it. Oh, it was up nice. If you got this trade, it gapped up hard. I just never heard of it. Oh, it's a Chinese stock. Okay. You know what? I tend not to follow them, Stephanie, because they're so linked to the political whims of the Chinese government, that the Chinese government can send these stocks absolutely into the abyss or flying like it did today. And this rise today was totally on governmental news. The Chinese government announced new stimulus spending, which lifted investor sentiment. So listen, it doesn't make it a bad trade. That's just my that is just my thing. And just because it's for some reason of all the tickers, that it's one of the tickers that's just not followed, Stephanie. Again, that does not make it a bad trade. Is there any chance that this will be made available for TOS? No, Andre, because TOS and TradingView don't provide that data. That's the problem. I mean, we would love to put this on TOS and TradingView and TradeStation and MetaTrader 4, but the data is not there. That tick data and that volume data is they don't make available, so we just can't. And I don't know. I don't want to mislead you by saying, we'll have it up and running in 2 months or 3. It's just not available. So there is no chance we can do it. And I wish we could. I really do. Hey, Dan, when is your next presentation? Is going to be either next Wednesday or next Thursday. You'll get plenty of time. The only reason I didn't go, I can't remember what day it is today. It's really bad. I think this is Thursday. The only reason I didn't go yesterday because there was a conflict. Somebody else gave a webinar, and I can't remember who it was, but I couldn't go yesterday. But in general, they're going to be on Wednesdays, and we're going to try to move them till 1 o'clock in the afternoon. Hey, Teresa, how does this work with the RLT system we're trading now? Listen, it works really well. And once Sergio finishes the coding, we're going to start doing sort of a merge, and we're going to see what we really fundamentally need. And I think that we're going to wind up with one system. That's just my gut feeling. So, but I don't know yet. So, I'm taking a wait and see, because like I said, all I want to do is create the best system we can so that everybody out there, like you, Teresa, like me, like Craig, and all the people in the company who trade with their own money. And like I said, I've got thousands of dollars tied up in my options trades, all dependent upon the accuracy of the system. So if I can make it better, I will amalgamate them, I will merge them both, and we'll come up with a new hybrid system. And that will really benefit everyone. Hey, Gary, LMT. Oh, I have Lockheed Martin, Gary. I really like Lockheed Martin. I have a spread on Lockheed Martin. We're up on the spread, I can tell you. Look at that beautiful trade on Lockheed. I mean, today. Happened late, but right back to support. 1, 2, 5 bucks off support here. I mean, this is a trade. If you don't take this trade, you need to find a new profession. You're going to take the trade right here, and you're going to take it right into the close. That's a $3.52 move. It's going to give you maybe 35, 40%, if you sell a credit spread, or it's a little too expensive to buy a call. That is nice money for trading the last hour of the market. But this is a gorgeous, gorgeous entry. This is what you look for. The rest of the day, this is not today, and this is after hours. So this is 1600 hours. And this is not on green background. I would be very wary. Let's keep looking. This is after hours. And here, all market internals are pointed up. Here's your first down. Market internals, now you're off resistance. The little bit of a spooky trade, but it goes into consolidation here and then takes a big nosedive. And after it does, the market internals are against you. You're out at the close of this candle. So you would have gotten a halfway decent trade. Now, the other thing that I want to talk about as we move forward in these sessions, and I got to close it pretty soon, because again, the office building is going to close, is taking a trade out of this consolidative pattern. They are so lucrative and so low risk. When you get this pattern, you can trade any down candle, but the likelihood of this breaking to the downside is extraordinarily high. Now, for 2 candles, the internals turn against you, but they don't last. And actually, it blows down with the internals against you. But you've got a great consolidative pattern to trade short right here on Lockheed Martin. And look at this long trade right here. So you're going to get some great trades here. Now here your internals are against you. Here they're with you. Trying to look for dark green. See, this pullback is not associated with any internals, so I wouldn't trade it. There's your pullback to support, fairly close, and your move up. It's definitely tradable. You just have to be careful. Only trade the dark green. Only trade off support long, off resistance short. It does, Dan. You know, but what we need to do though, Dan, is we have work to do to amalgamate, you know, to sort of congeal the systems. Yeah, but ultimately that's what we're going to do. Will it give you an alert audio plus an arrow when the conditions are optimal? Dan, when we automate the system, it will. So that's a little bit of ways away, but it's not a long way away. I'll tell you that now. This time I'm going to have Sergio put the automated entry on our trading chart. So if we want an alert that an automated trade has taken place, we can do that. But that's going to have to wait automation. But we will do it. I can just tell you that. Everyone's going to get a recording. I just got, hey, Manuel, I got your email. Thank you for your hard work. Make America great again. Hey, listen, I just want to make all of us great, and then slowly we will. That's how we make America great, right? I would like to see this software in real time. Well, you know what? If you have it, you can watch it. If you're in the trading room, if you want to do it, you know, you're more than welcome to call Rory, and on TeamViewer or there's another one. He'll let you watch the thing move all day. So you won't have trouble with that. In fact, I think you'll be very impressed when you see it move in real time. And that's a very stable system. And that from candle to candle, the markets that are moving with you, they stay with you. So there's not a lot of abrupt changes. And you'll like what you see. So I watched it all afternoon. Any plans to add more features? Yes, we're going to add a lot more features to the software manual. Hey, Tony. Well, I think chi-squared will allow you to determine whether or not what ratio is going to provide you with statistical significance. In other words, let me just get a line. Like this. So if we're just looking, let's say it doesn't matter whether we're looking at ticks or whether we're looking at ticks or not, but let's say we want, and this may be a little bit of a, but here's up volume. Here's up volume. Now, we know that mean is going to be 250 up, 250 down. I probably labeled it wrong. 250 down. So if the ratio is, say, 375 up and that would leave us with 225 here. Is that statistically significant? And that's a chi-square analysis. Now, I may have set this box up slightly wrong on the fly, but that's what we want to see. Is from mean, is this disparity statistically significant from this? I hope that makes sense, Tony. To me, it doesn't look like a Fisher exact type of analysis. It looks like a chi-square. Trade station, we just can't do. That's very soon, Kachmira. It's only been delayed a little bit by my pushing Sergio here. Now you can go to Google. Where do I have it? And if you go to chi-square here, you can do it yourself. Here's your chi-square calculator. You just want a 2x2. And here's your chi-square calculator. And you just put your data in here, your data in here, here, and here. And it's going to give you whether or not you've got statistically significant data. Already on the compass is this market internals Dominator. It's not, Jeff, but the add-on is extremely inexpensive. And that add-on will allow you to get all the upgrades and additional add-ons from then on forward. You just got to call Sergio. I'm sorry, Rory. Now, let me find the. So this price, wherever I put the slides, I don't know where they are. I think I dropped them down here. Is only if you're new and you don't own anything. You just call Rory. You'll see it. It's very right. Fang stocks. Great point. Hey Jeff, Marcus, the 5-minute time base. I like the 5s the best, Jeff. I think the 2 minutes on futures is too fast. I think the 2 minute on most stocks is too fast. I think you get really nice data off the 5 minute. Now, you know, if you have the system, you can see what you like the best. But I looked at the 2, the 5, the 15. The 15, the data is stellar, but that's obviously not a day trading time frame. When you go to a 15-minute or a 30-minute or an hour, you're going to get terrific data, but that's where you're going to start looking to swing trade and maybe buy an option. Hey, Richard, great system. I love it. Are you able to cover 1-minute chart on futures? Absolutely, Richard. I don't have time. I will do it next week. This works fine on a 1 minute. I'm telling you, it does not matter. The 1 minute data I find a little bit fast coming through, but you're going to get those box confirmations, whether it's a 1 minute, a 2 minute, or a 5 minute. It is irrelevant. Hey, Craig, don't you need kinetic? You do need them, Craig. You need kinetic, and you need the CME, correct? But they give you a discount if you have CQG or kinetic. CQG or continuum. So the additional data is only going to be $2. You still have to get the base though, Craig. And what we want to do is make this available to you so you can trade it in the room. You don't have the NinjaTrader Continuum connected. We don't use it. I just rely totally on the you're going to need to attach the continuum, because that's what's going to tell your broker what you're doing, but it's not going to utilize any data from continuum, and that's going to be the secondary connection. Sergio will configure that. First up will be the kinetic feed, and then the second up will be your continuum or your CQG feed. So the broker obviously gets your trades. Do you see a time that we trade the Dominator? It's possible. No, my pleasure. Absolutely, John, you get a reduced cost. You want some big juicy mangoes? You know, I swear everybody fights over the mangoes. They're really good. My pleasure, Dwight. Let's make money. Let's look. I mean, that's the only purpose I serve, is to provide you with really good software that makes us all money. I mean, I use it too. Just give you time to work it out. No problem, Boris. I had my best day today using both the Emma. Nice. Great, Bart. Just what I need. Yeah, we just can't. Web-based. And I got to go really quick because Rory wants to go home. They're closing. I mean, they start closing the office building, and they're going to turn off the air conditioning at some point. So money flow tracker owners need to pay a fee. Yes, Sal, but it's very small. Because remember, this is a totally independent system. I mean, our first thought was to just charge full price, but we're not going to do it. We're going to give you a huge discount if you own it. And once you pay that, you'll never pay again. And I'm telling you, this system is going to take on a life of its own going forward the next few years. Elon needs to get these satellites. That's really funny, Bart. Thank you so much. Hey, Steve, thank you. My pleasure. No, it's a stock. I know Eileen's she's really reliable. Hey, Gary, I got to really run here. I'm going to show you on Unorenco on the next master. Remember, we're going to keep doing these master classes from now until I run out of oxygen, which hopefully won't be for another 100,000 years. No, not right now, Charles. In about a week, it's going into the futures trading room. What's the p-value associated with the data result? Listen, I swear to you, I'll give it to you, but I can't do it now. No, they should give you a discount, Craig. I'm telling you. No, we're going to be doing more. Every week, we're going to do one. Every week. All right, listen, everyone. Have a really, really wonderful evening. I mean, we really are doing our best to provide you with the best software. We don't do gimmicks and we don't do crapola. I just want you to know that. I see what I'm floating in a sea of isolated arrows that always work. We're just not that kind of company, and we're never going to proffer that. It hurts us because these people have a lot of reach and they have a lot of power, but we're not doing it. So we're just going to try to create the best system that we can for really. I mean, it's the only way I can sleep at night. So everyone have a really, really great evening. We will thank you very much, Mark. Great presentation again. Great system. Many thanks. You too, Luke. Have a really wonderful evening, everyone. We will do another one next week. I'm going to do them like clockwork. I wish you all the best. And I'm here, and I will be back in the trading room very, very, very short. Take care, everybody. Have a great, great evening. And I really appreciate your time, everybody. My pleasure. Take care, everyone.